Hello and welcome to my weekly market analysis for gold and silver futures. My name is Brandon Wendell, Charter Market Technician. I'm going to guide you through some of the analysis I've been doing on these charts. And don't forget, if you enjoy what you're seeing, be sure to subscribe so you get notified when new videos get posted every week and other information as well. So, looking at February's gold chart, we had a pretty significant collapse in the past here in November. We've been kind of sideways and steady in December. So, this sideways consolidation usually leads to continuation of the previous trend, which was down. So, it's suggesting that we may have a bottom coming in around 1756 before we get a significant bounce, or even 1717.6 before we get another bounce. Looking at the 4 hour time frame, right now, again, struggling in price. The momentum, we're just going sideways. You're getting mixed red and green, perfect for the holidays, but not so great for your charts. And you can see that we've got these lows and highs, just going back and forth with no real momentum in either direction. That means you may just want to sit back and not trade gold without a clear trend. Looking at the 60-minute time frame, last week's picture that I put out, this is from the analysis from then, you can see that we ended up having a little bit of bullishness coming in. So I was warning that we had a couple of lows that were made, but we didn't go below 40 on the RSI, and that was pretty bullish. So moving from last week to this week, basically that's where it cut off. Unfortunately, the bullishness broke down. We went and made a slightly higher high, could not get above 1800 though, and you can see we're going above 60, below 40, above 60, below 40. It's all over the place. So we have no real momentum in any direction, and it looks as though we're going to continue to move sideways for a period of time here. And really, gold isn't in huge demand unless it's an inflationary hedge, or when the Chinese New Year comes about, there'll be another big move for purchasing physical gold and even gold futures. So until that happens in February or late January, there's really nothing to see here in gold. We may end up going sideways for a little bit. So be patient, look for something else that might give you a better opportunity. Going all the way down the 15-minute time frame I showed you last week, we basically saw this area of demand at 1777.9, and we're seeing somewhat bullishness because we were staying above 60 or 40 and 60. Anyway, this week, what happened was that demand zone held. And when I mentioned that, go back here last week, you see 1777. Here it is, 1777. Ended up working like a charm where prices came down, bounced off that area multiple times. However, the more times you test an area, the weaker it becomes, and we end up through it. So for this week, we've got a supply zone real close by that we might be testing, 1784, 1785. That could provide just a short-term trade because we're near the top of the channel. We're probably going to move to the bottom of the channel, which would be the 1776. So if you can sell and get about 8 to 9 points out of this on the move down, it's still decent compared to the risk you're looking at as well. But other than that, there's really not much going on gold. So you want to really focus on very small time frames if you're going to try to trade this, or look for something else that's better. Like I said, a different market. Now, silver on the daily chart was moving down quite rapidly. It's suggesting there might be a pause coming up. Now, I don't know if this is going to be a rally or just a pause looking at this chart, but we are making some lower lows in price. As it's moving down, we're getting less bearish momentum. The bulls are creeping in without people seeing. And gold and silver can move together, but they can also diverge because they have different mechanical and scientific applications. So that's why you do see them separating from time to time. Anyway, looking at the 4 hour time frame, you see the divergence here as well. Lower low in price, higher low in the indicator. However, looks like we might be bumping our head right in this area of supply at 22.26.5. So when we look back at the daily chart, positive divergence was saying we might get a little bit of a push to the upside. It's not going to be a very big push because we're running right into supply and we don't have enough momentum to keep going. So we may be getting ready to move down to 21,660 from this 22,265 area. When you take a look at the 60-minute chart, same picture. We're getting closer and closer to supply, which is likely to hold us down at 22.3. We had a positive divergence that pushed us off the low, but I'm looking at possibly selling as things are likely to continue to move to the downside, push silver just below 22 bucks. And if you're looking at a 15-minute chart, we may have a small move to the upside. That's a very high risk opportunity where you can buy the break out of this little triangle Symmetrical triangles like this that happen after a pull or big move up, they usually move the height of this pole to the upside, which actually would take us above the supply. I don't see that happening. I think the best play is if you're buying the breakout to the upside, you get out of that 22 to 29.5 and maybe even reverse and then target down at the lows of 21.930 or even lower. So I think there's more opportunity to the downside right now in silver than there is to the upside. So that's pretty much what I'm looking at when it comes to the precious metals of gold and silver. If you liked what you saw here, please don't forget to click on the subscribe button so you can get notifications when this comes out once a week, and other videos I may be putting out as well. Love to hear back from you. You can give me feedback. And until next time, trade safe, trade well, and take care, everyone.